So good morning, everybody. You're welcome to today's technical market outlook brought to you by Trading Pro for New York session for the 27th of June, 2024. As always, we're going to start off with the economic calendar. So if we look at the economic calendar, today being Thursday, we have lots of high impact dollar news line. We have final GDP, unemployment claims, core durable goods order, final GDP price index, and pending home sales between 1:30 to 3 p.m. So that's going to be a whole lot of activity. So without taking so much of your time, let's get down to our pairs. So as always, we're going to start off with the EURGBP, US 100, dollar index, Euro USD, GBP USD, gold, pound yen, and euro yen. Can you all still hear me? Can you all still hear me?
Yes, I can hear you.
Okay, we're going to start off with the EURGBP, and like I always try to explain to people why we need to start off with the EURGBP. The EURGBP gives you a bias of euro strength or pound strength. So because in the trading industry, what you're basically doing is you're either buying strength or you're selling weakness. So when you know what this is doing, it gives you an added advantage. So looking at this pair is still bearish overall, but we might be looking at a bit of a retracement. So if we look at it now, this candle pattern, it might be playing out, but let's wait and see. So if we go to the 4-hour time frame, price is basically sitting within a range of sorts. It's sitting within a range candle. So looking at this now, we didn't have a close below this low here. Price just came very close to it, rallied this. If you watch the review of yesterday, you know where I pointed this at. So looking at this, we might have a little bit of a retracement into this other block here. And if it plays out, then we might see price try to sweep 84.75 before 84.78 first. So that's what we'll be waiting and watching for going forward. So we might see short-term weakness, London, and going into New York session, because this we already have a swing high here. 1, 2, 3, 4. If you attended the class yesterday, the swing high is already in place. That means the possibility that this may still extend here before going back to the upside. So we might see short-term pound strength. If you look at your chart, you would already notice it. So the next pair we're going to be looking at is US 100. So before we go forward, I'd like to introduce our broker. Trading Pro is an international multi-award winning broker. They're offering lots of interesting account types, swap free and spread free. They also offer beginner training and advanced trainings, and they also offer twice daily technical market analysis at 10 p.m. and 10 a.m. That is what you're enjoying. And they also have social platforms on Telegram and WhatsApp where trade ideas and trade signals are given on a daily basis. So it would be nice of you to take advantage of this. If you would like to find out how to get on board, just head down to my YouTube page. You get down to my YouTube page. Sorry. 174.26. And you head down to the YouTube page. Under this icon, you can hit me up on Telegram, or you can sign up directly by using the N and Learn icon here. So with that out of the way, let's get down to what we have. So we're starting with the US 100. This pair is still bullish. If you remember what I said yesterday, this fair value gap here might work as support, and you can already see price is already moving away from it. So if we move down to the 4-hour time frame, we already have a swing low. So the possibility exists that price is going to go for 1977, 19766, and then 19806. So this pair for now, if you notice, it did not close below this. So that points to the fact that you might be seeing a sweep of any of these highs or this fair value gap. So the next pair we're going to be looking at is dollar index. The dollar index, just like I pointed out yesterday night, this price is reacting from this rejection on the weekly. This is still bullish, but you might see a bit of a retracement as a result of this rejection. So if we look at this now, the first 4-hour fair value gap has been broken by price. So which points to the fact that, and you can see there's already a retracement into this and a rejection. So looking at this pair, we might be seeing price moving down into this. Might be seeing price move down into this. Price may be coming down to try and fill this lower fair value gap here. As you can see, there's already a rejection from the upper level. So if we drop down to the 1 hour time frame, we might be seeing a little bit of weakness as a result of the news coming in by 1:30. So price may try to retrace to fill in all this imbalance left before it continue to the upside. So for now, this pair is still bullish as long as it stays above 105.37. So the next pair we're going to be looking at is Euro USD. Looking at the Euro USD, this pair is still bearish. But what we're experiencing, because of the weakness that we might see, short-term weakness on the dollar index that we might see a bit of an internal range retracement. So we'll be watching this fair value gap here and this here on this pair. As you can already see, price is already setting up for that retracement. So going into New York, we might see bullish, because going into New York, we're going to see dollar weakness. So we might see bullish move. You can see already there's a full rejection from this 1 hour fair value gap, which points to the index to move higher into 106.90 to 107.18 on this pair. Remember, this pair is still bearish. The next pair we're going to be looking at is GBPUSD. Looking at this pair for now is going to retrace a bit. We'll be looking at this fair value gap here and this. So we might see a little bit of a retracement, bullish retracement, and a continuation to the downside on this pair. So the next pair we're going to be looking at is gold. Gold is bearish, but we're going to see a bit of a retracement. Just like I pointed out yesterday. If you watch the review of yesterday, there was a level I pointed out on gold. And that was, I think it was this high. I said, once you get the close above this high, I think it was this high, either of these highs, I can't remember. You see the retracement, you see the bounce, the break of this, sharp move back, sweep of this liquidity. And that's what we have playing out now. Price is moving up to the upside. If we look at the 4 hour time frame, most likely this will close above this 4 hour fair value gap. So price is within this area. So going into New York, we might see bullish move on gold. So you'll be waiting for a retracement. You cannot take a long position here. So what you would do is you drop down to the 1 hour time frame. You're going to box this low to this high. Then you wait to see what price will do at the equilibrium and the 75. If it gives you bearish evidence, then you can take, because this is an external to internal range liquidity. This pair is still bearish. The next pair we're going to be looking at is the pound yen. This pair is still bullish and it is ranging within a 4 hour range candle. So if we look at this now, price is within 1, 2, 3, 4. Within this week here. And if you notice, they've already closed above this 4 hour fair value gap. So what you'll be waiting for is a retracement. We already have a change in the state of delivery with this candle here. So what you wait for on the 1 hour is a retracement, because where price is now, you don't want to take a long there. So you wait for a retracement, probably into this down candle or the lower time frame, and a continuation to the upside, because price will be targeting 203.15, and I can't say for now, but this place is still far-fetched, but I know 203.15 price may see it today. So the deal there is, if it breaks above 203.15, then you can then do a projection. You would take the low to the high and you project it upwards. It's 72 pips. So, and that brings it clearly to that range area. So it might meet half of it. Let me look for the other marker I use that shows half of the range. So, okay, yes, this one that shows me half of the range. So you have this here. So first, if it breaks above, you target 203.50 before this high. So that's what we have on the pound yen. Then the next one we're going to be looking at is the euro yen. This pair clearly is bullish. I still anticipate higher prices on it. because of this bullish pattern on the daily. You can already see it's already setting up. So just like this pair, change in state of delivery. This is a retracement because this is a daily time frame. It's going to take a while. So if this pair starts to move, first target is going to be 172.58. So that does it for the session. Then, because if it gets if the move is very strong, then you'll be watching the half of this box, the equilibrium of this box, which will come in once this area gets taken. The next target you start 173.02, 173.44, and 173.86. So any questions? Anybody want me to look at that I didn't look at before we call it a day?
Okay, I'm sorry. Okay, this your box. What do you call it, and how do you
It's a
use
GAM
it?
box. It's a GAM box. This is it here.
Oh,
GAM
okay,
box. I use it to bridge because you have a fair value gap. I use it for so many things. I use it for projections, and it helps me in my trading. I pick a high, I pick a low. You can use it for fair value gap. It will show you the consequent encroachment. And sometimes you could use it for equilibrium. So these are the settings of it. If you pick it up, these are the settings of it. Every other thing is turned off except for 0, 1, 0.25, 0.5, 7.5. Just note the settings. This is how I use it. So when I'll be watching, because most of my trades are at equilibrium or slightly at equilibrium or premium, slightly at premium. Because when you're looking to buy, you're looking to buy at this equilibrium or discount. So it helps me gauge it very well. I hope I've been able to answer your question, Mr. Dari.
yes, you have. Thank you very much. You
Okay,
have.
so in the
Okay, well, I still
absence,
have one more question, please. Can you look at US 30 for me, please?
US
That is
30,
the Dow Jones.
US 30, US 30, okay, US 30. Well, let me see. Let me see. Let me see. On the daily, 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 on the daily. Daily. This is a very engulfing out of this daily fair value gap. This is a daily fair value gap below. This type of market conditions are what you avoid because you have people up. Just like devil, this is a devil, this is a deep blue sea. You're going to have a very tough time here. So let me just mark it out. Mark this fair value gap, mark this fair value gap, mark this, mark this. So now we go into the daily, to the 4-hour time frame. And if you look at the 4-hour time frame, we have a change in state of delivery. But the break here points to the fact that any retracement on this might be a move back to the downside. So let me look at this on the 1 hour. So on the 1 hour, if price does not close convincingly above here, it's going to go back down. Because on the 4-hour already, if you look at the 4-hour, this this set of this low was used to make this high. And if price intended to continue higher, it's not supposed to close below here. So on this pair, any move up will most likely go back down. So if you ask me, you could take a long position because we already have a change in state of delivery on this candle. So you could take a long position, but if you're taking the long position, it will just be a short-term move to fill in this imbalance and move back to the downside. So that's why I see on this US 30. The conditions are not so favorable. It's between two very, very strong zones, as you can see on the daily. So you're not holding for Olympic medal. It's just short move. Big rejection here, big rejection here. So that's it. So thank you all for taking your time to attend. I wish everybody a blessed and lovely day and a wonderful New York session ahead. Thank you all and goodbye.